This podcast includes content generated or assisted by artificial intelligence. Also, the content shared on this podcast is for general informational purposes only. It does not constitute financial, investment, or legal advice. For specific legal or financial advice, please consult a qualified professional. Welcome to Luxembourg Intelligence News Weekly. Today, we're really digging into the sources on what feels like a major transformation happening in Luxembourg's financial center. We're seeing these big regulatory, corporate, and digital shifts all at once. It seems, well, pretty intense right now. You've got these economic headwinds, this tech revolution changing things, and then a whole stack of compliance deadlines hitting around the same time. How are firms supposed to navigate all this?
That's exactly what we're exploring in this deep dive. It's about understanding those key pressures. So let's start with the bigger picture, the macro context. The International Monetary Fund, the IMF, in their recent Article 4 consultation actually called Luxembourg's economic performance lackluster. They're projecting pretty modest gross domestic product growth, maybe 1.6% for 2025.
After just 1% in 2024, right?
Exactly. And you still have these persistent issues like tight financial conditions, some potential vulnerabilities in real estate. All that puts a squeeze on financial service providers. It means compliance costs become a really significant strategic issue. And, well, it could even push some smaller firms towards market consolidation.
Okay, so the tough economy makes every cost bite, especially compliance. But like you said, there's also technology, and that feels like more than just a cost. It's a fundamental shift, isn't it? We've got the Digital Operational Resilience Act, DORA, which came into force January 17th, 2025, and parts of the EU Artificial Intelligence Act kicking in from February 2nd.
Precisely. And these aren't just, tick box exercises. DORA, especially, fundamentally changes how firms must manage their tech risks and operational resilience. What's interesting is seeing the regulator, the Commission de Surveillance du Secteur Financier, the CSSF, using artificial intelligence, or AI, in its own supervision,
right,
while also demanding very rigorous DORA-compliant risk management from everyone else. So any new tech adoption has to have that robust framework baked in from the start.
And this lands right when firms are staring down some very real, very near-term deadlines.
Oh, absolutely. The operational pressure is definitely high. Several critical dates are coming up fast. You've got, for instance, the June 30th, 2025 deadline. That's crucial.
That's the one for the unregulated alternative investment funds, the AIFs.
Yes. Their first ever anti-money laundering and counter-terrorist financing AML CFQ reports need to go to the Administration de l'Enregistrement des Domaines et de la TVA, the AED, by then. That's a big operational lift for them.
And not just for funds. There's that other deadline affecting everyone.
You mean the Luxembourg National Identification Number, the LNIN? Yes, October 1st, 2025. That's the enforcement date for filing those with the Luxembourg Business Register, or LBR. And it's not a minor thing. If you don't comply, the LBR can actually halt your corporate filings. That's a hard stop.
A hard stop. Okay, let's maybe zoom in a bit. What's happening in specific sectors, say investment funds and securitization?
Okay, for funds, specifically collective investment schemes, the updated framework from the International Organization of Securities Commissions, IOSCO, on liquidity risk management that came out May 26th is a really big deal. It's moved from being high-level guidance to something much more prescriptive. It requires funds to be categorized based on liquidity and, importantly, implement specific liquidity management tools, LMTs. Things like swing pricing or redemption gates.
Which directly hits the net asset value, the NAV, that investors actually receive, right? And means updating documents.
Absolutely. Prospectuses, risk management processes, they all need significant amendment. It changes how you price things, how you negotiate liquidity terms. Now, for securitization, there's actually a bit more optimism. We've seen growth of around 1,590 active vehicles by March 2025. And a major positive was resolving that anti-tax avoidance directive 1 ATAD 1 interest limitation uncertainty. The single company group exemption from December 2024 cleared that up for most vehicles.
That must have been a relief. But I heard there's a new complexity cropping up. Something about value-added tax, VAT, on director fees.
Yes. That's stemming from recent Court of Justice of the European Union decisions and some new Luxembourg guidance. It's become very fact-specific. It really depends on the director's setup, how the services are delivered. Needs careful analysis.
Okay. Shifting gears slightly to corporate law. There's this new cross-border mobility framework that sounds quite fundamental.
It really is. The law came into effect March 2nd, 2025, and applies to drafts published after April 1st. It transforms cross-border mergers, demergers, conversions for common company types like the SA, SARL, and SCA. The big change is the notary's role. They now have this anti-abuse control function and can actually refuse to issue the pre-transaction certificate if they have serious suspicions.
Wow, that adds a whole new layer to planning deals.
Definitely. Plus, you have stronger statutory rights for minority shareholders, like a cash exit option and better protections for creditors and employees. It all impacts deal timelines, pricing, negotiations significantly.
And just to hammer it home, that LNIN filing deadline, October 1st enforcement, applies across the board for companies making filings with the LBR.
Non-negotiable. Though on a related note, there was some breathing room granted on sustainability reporting. The initial Corporate Sustainability Reporting Directive, or CSRD, deadline got pushed back 2 years for most companies.
A reprieve, but not a cancellation.
Exactly. Still need to prepare that ESG data strategically.
Right. Now, compliance intensity. AML-CFT always seems to be in the spotlight.
And rightly so. The updated 2025 National Risk Assessment, the NRA, was published in late May. It's essential reading. It highlights the main foreign threats fraud, tax crimes, corruption, but also a notable surge in domestic cyber fraud. And it flags certain sectors, like legal and accounting, as having high inherent risk.
So all supervised firms need to check their own internal risk assessments against that NRA.
They absolutely must. Review and update controls based on those findings. And again, that AED deadline for the unregulated AIFs.
June 30th. Got it.
Yes, June 30th. They need the whole package. The RC report, that's the responsible to control, the questionnaire, the appointments. Regulators are looking closely at the separation and seniority between the RC and the RR, the responsible to respect. And looking forward, we've got updated Financial Action Task Force, FATF, Recommendation 16 on Payment Transparency, just published June 18th, and the new EU Anti-Money Laundering Authority, AMLA, starting to get operational from late 2025.
Suggesting things are only going to get tighter, more harmonized.
That's the direction of travel. Particularly, expect more focus on terrorist financing, or TF, risk.
Okay, last key area, banking and financial services.
Yeah.
Huge shifts there too, especially with DORA.
Massive shifts. The CSSF put out new circulars back on April 9th, 2025, basically operationalizing DORA for ICT risk and outsourcing. It creates a clearer framework distinguishing between entities fully in DORA scope and others. But the workload is immense, repapering all those ICT contracts with mandatory clauses, setting up registers of information, updating policies.
And the incident reporting changed too.
Yes, mandatory reporting via the CSSF's eDesk platform since January 17th. The requirements are stringent, and it's leading to what you might call a flight to quality when firms choose their ICT vendors.
And alongside DORA, there's the instant payments revolution.
Revolution is the right word. The EU regulation, which became Luxembourg law on April 11th, mandates 24/7 availability for euro transfers, completed within 10 seconds.
10 seconds.
10 seconds. At the same cost as a standard transfer. Plus, crucially, free IBAN and name verification before the payment is sent, and daily sanction screening is required.
That speed must clash massively with traditional AML checks.
It completely does. You can't rely on overnight batch screening anymore. It forces huge investment in real-time automated systems that can check sanctions lists daily and flag risks in seconds. It's a powerful driver for adopting AI and machine learning and compliance functions.
Right. So let's try and pull these threads together. For you, our listener, what's the bottom line here? This isn't just abstract regulation drifting down. It means, well, concrete operational changes are needed. Strategic choices about technology and outsourcing, meticulous updates to documentation and processes, a much sharper focus, really, on risk management across the board.
It's about integrating compliance, tech, and business strategy much more tightly to stay, resilient and competitive in this environment. It demands proactive adaptation, not just reaction.
Okay, so here's a final thought to leave you with. Given this relentless pace of change, both regulatory and technological, how can firms in Luxembourg's financial sector do more than just keep pace with compliance? Is it actually possible to leverage this dynamic, maybe even use technology, to turn compliance from purely a cost center into something that enables strategy, growth, maybe even provides a competitive edge?
That's the key question, isn't it? A real challenge.
Definitely something to think about. Hit that like and subscribe button.
It was the Luxembourg Intelligence News Weekly.
This podcast includes content generated or assisted by artificial intelligence. Also, the content shared on this podcast is for general informational purposes only. It does not constitute financial, investment, or legal advice. For specific legal or financial advice, please consult a qualified professional.